This is Ben Poole for Finextra at Future Money Nordics. I'm now joined by Jerry Norton, Managing Director Financial Services at CGI. Jerry, thanks for being here.
Pleasure.
So I wanted to run a statement by you that I'm hearing quite a lot about these days. Infrastructure modernisation is the key to unlocking innovation in payments. So what does that mean, and how can a mindset like that give banks an advantage, do you think?
Okay, it's certainly a true statement. That's the first thing, Ben. And the reason why it's so true is because most of the payment infrastructures we live with today, whether they're in the UK, rest of Europe, here in Finland, or indeed wider afield, were built and designed 20, 30 years ago. And by and large, they were really automating existing business processes. Now in the internet world of 24/7, then actually those things have changed, and therefore the payment infrastructure is not responding to that. The classic example is that most payment infrastructures are only open from 9 o'clock till 4:30, 5:30, normal banking hours, Monday through Thursday, Monday through Friday. In the internet world, I want to buy and sell things at weekends. The infrastructure behind the scenes can't deal with that. It can't settle, it can't clear properly during those times. We're all about trying to change it by effectively putting new infrastructures in to do that. The reason why that's important to banks is it's so that they are being threatened by new players, threatened, not necessarily being displaced, but being threatened. This would put banks back at the very centre of that debate and being able to actually compete on a different sort of set of terms than those competitors. They could make new products, new services, which actually do respond to this new digital world, the thing that we as consumers want, the thing that actually regulators and other organisations want them to do.
Many banks have embarked on digital strategies, but quite a lot of these initiatives are purely focused on the front-facing customer aspect. Is there a danger of going down that path?
Yeah, there is. I think there's two dangers. One is the banks do need to cut costs and improve the efficiency of their organisations. If you're just doing the bit on the outside, that doesn't achieve that goal. But more importantly is the new services. Digitalisation means, to me anyway, a whole new set of raft of services which the consumer wants. If all you're doing is a bit of web banking through a mobile channel, great, and that's what we want, but we actually want more than that. So it's not enabling those real digital improvements, and there's a host of those, and we're trying to give you some examples. In the insurance sector, I could start to buy my insurance for my car at the same time as I pay for it. My insurance on my car is no longer any bits of paper, it's actually done in a digital form, and it's all one seamless transaction. Now if I do that, there's some real consumer value in that. At the moment, if all I'm doing is an internet payment, yes, but it doesn't go far enough. So the banks are not making enough of the opportunity if they just do the peripheral stuff.
And how can banks take better advantage of customer data to offer better service to consumers and also to compete against new market entrants?
Well, unfortunately, this is an old one, actually, Ben. This is an old issue, that the banks have a huge amount of data about me as an individual. This is nothing to do with digital. They've always had a lot about me as a consumer. It's the old idea about lifestyle. It's all about me as I move through my ages, about how my circumstances change. It's about using that data to better effect, to help me. It's also about things that when I buy a new product from the bank, I don't have to reapply through the same KYC process that I've already done that another bit of the bank knows about. So it's using that data to help me either be more convenient or to make sure that the right service is sold to me at the right time. That's not a new idea, that's been around for years, but banks have that raft of data about me which they're not using to that effect. So that's number one. Number two is obviously they can't use a whole lot, the broader data can't be used because for obviously data protection purposes, but the trends about that can also be used. You can detect how people are buying things, where people are buying things from. Those trends can be used to better effect. So the banks have most data about most people, most data about most businesses. They are not putting that to good effect. That should be done irrespective of digital anything. That should be put in place.